Hello everyone and welcome back. Jeb Smith here. So in today's video, we're going to talk about FHA versus conventional, but not in the way that you might think. We're actually going to talk monthly payments. We're going to break down a 3% conventional loan versus a 5% conventional loan versus an FHA 3.5% down loan. We're going to go over a couple of different credit scores, 640, 680, and 740 for each program. We're going to break down that total monthly payment for 3% down, 5% down, and 3.5% down, and show you which option actually saves you the most amount of money, which is the cheapest option. Now, a lot of you guys have been asking questions about what's my monthly payment at this credit score doing this loan, and understand there's a lot of factors that go into computing your interest rate and all of that good stuff. So for today's video, we have to assume a couple of different things. Now, I'm going to put each one of these payments on the screen so that you can see exactly what I'm talking about, what your payment would look like at certain credit scores using that particular loan. But we're also have to assume that, things are across the board, right? Because each of you are going to be buying different types of property, you're going to be in different areas of the country, and so on and so forth. So what we have to do is establish some baselines. So for this video, we're going to use a purchase price of $350,000. Now in parts of the country, you're gonna say, that's crazy, my average house price is $150,000, why are you using $350,000? Because in California, our average house price is much higher than that, in the $700,000s. And so $350,000 is kind of that middle ground, if you will, that people across the United States can use as somewhat of a baseline. We also have to use, we're gonna say it's a single family residence, right? For purposes of doing this video, we're not going to take condos into account because there's different hits with condos and all of that good stuff. For purposes of this video, we're going to talk $350,000 purchase price. We're going to talk about single family residences, and we're going to break down those payments for you to show you which one is going to be the best option. Now, before we do that though, I want to take a minute and ask a favor. If you're new to me, new to my channel, and you like all things real estate related, whether it's buying or selling real estate or finance on the mortgage side, do me a favor and hit that subscribe button and stay up to date on content like this. So, understand this video is for educational purposes only. I'm not a licensed NMLS loan officer. I'm not licensed by the, by the National Mortgage Licensing Board, if you will. I'm a real estate broker here in California, and this information was provided to me from my local real estate broker yesterday on January the 18th. So this information is about a day old, but understand the interest rates don't vary that much from day to day. So, the numbers are going to be pretty accurate. But with that said, make sure you're talking to a mortgage professional, going over your scenario. Don't just use these numbers because that's what I'm throwing out there. This is merely to show you the difference in different loan programs and open your eyes to, different types of financing and why FHA might end up being a better option in some cases when putting minimal amounts down, as you'll see in this video. Now, clearly, FHA has its downsides, like mortgage insurance for the life of the loan if you put that minimal 3.5% down. But what I always say is that most people don't keep their loan for that long of a period of time. So if you're planning on keeping your loan forever, then go with a conventional loan. But if at some point rates improve, you plan on selling, buying something bigger, then FHA really isn't that bad of an option because you're not going to have that loan for forever. And it allows you to get in the game and potentially save money using FHA. So if you want to see more pros and cons on FHA, I'll link to a video here where you can find that information. So let's take a minute and talk about different loan programs, and we're going to break down these payments as I mentioned just a moment ago. So conventional, their minimal amount down is a 3.5% or a 3% option rather, where FHA is a 3.5% option down. So one allows you to only put 3% down. FHA requires 3.5%, and then conventional also has a 5% option, which we're going to throw in this mix. So I'm going to read from a paper just so that I make sure the numbers here are accurate, but I'm going to throw them up here on the screen to help you, see them real time, and then we can talk about which one actually saves you the most amount of money based on that credit score. So for purposes of starting this video, we're going to talk about the 3% down option. This is the one that allows you to put the minimal amount down, and we're going to start with the lower credit scores, right? So as your credit scores change, typically your interest rate changes, your mortgage insurance changes, there's different factors involved. So understand conventional loan, you put less than 20% down, you're going to have mortgage insurance. With FHA, you have mortgage insurance on the loan regardless of how much you put down. If you put less than 10% down, it's on for the life of the loan, as I mentioned a moment ago. And if you put more, 10% or more down, it comes off after the 11th year. But mortgage insurance is going to be involved in this equation in our monthly payment, which you're going to see here in just a minute. So let's start with 3% down. We're going to assume you have a credit score of 640. So that's going to give you a rate of 3.375% is what I was quoted on this. Again, just relaying the numbers, not quoting you an interest rate. Interest rate's 3.375. The mortgage insurance is 1.82%. So mortgage insurance is really high the lower your credit score gets, which gives you an effective interest rate of 5.195%. That would give you a monthly payment of $1,592. Mortgage insurance on that is $514.91, which would give you a payment of $2,015.82. So $2,015.82 for conventional loan, putting 3% down with a credit score of 640. Now let's go conventional, putting 5% down to see how it improves, and then we can talk about FHA. So 5% down, credit score 640, interest rate's the same, 3.375. MI is 1.36, so a little better on the 5% down versus the 3% down, which gives you an effective rate of 4.735. A moment ago, I didn't explain what effective rate is. It's the MI cost plus the interest rate gives you an effective rate. That's basically what you're paying off of for your principal and interest and the MI. So the principal and interest on that is $1,469.97. Mortgage insurance is $376.83. Gives you a total monthly payment with everything at $1,846.80. So roughly $160, $170 better per month, putting a little bit more money down. Now let's talk about FHA. 3.5% down, same credit score, 640. Interest rate, 2.25%. So over 1% lower in interest rate. MI is 0.85%. So MI is not going to change on any of the FHA loans, which gives you an effective rate of 3.1%. Total monthly payment, $1,270.97. Mortgage insurance is $235.52. Total monthly payment, $1,506.49. So almost $500 better by putting another 0.5% down on an FHA loan versus that 3% loan. And $340 better than the 5% down option. So, you put 5% down and you had a credit score of 640, FHA is actually better putting less money down at that same credit score. So now let's talk about 680, right? So we talked about 640, now let's talk about 680. We're going to do the same thing. We're going to go through all three of them. 680 on a 3% down gives you a rate of 2.99%. MI is 1.24%. Effective rate, 4.23%. Principal and interest, $1429.52. Your mortgage insurance is $350.82. Gives you a payment of $1,780.33. So about $240 better by raising your credit score 40 points on that 3% down. 5% down at a 680 credit score, 2.99%. MI rate is 0.91%. Effective rate 3.9%. Principal and interest $1,404. MI is $252.15. Principal, interest plus mortgage insurance $1,652.19. So what, $130 or so dollars better by putting an additional 2% down with that credit score 680. Now let's talk about FHA. FHA 3.5% down, 2.25%. So interest rate stays the same as the 640. Mortgage insurance 0.85, effective rate 3.1, gives you the same monthly payment at $1,270.97. $235.52 is the mortgage insurance, gives you a total payment of $1,506.49. So between a 640 and a 680 credit score, FHA, the payment's exactly the same, but that's a savings of about $145 versus the 5% option at that same credit score. So FHA still has the lower total monthly payment. But now let's talk about 640, right? So 640 is typically the highest, the highest tier of credit scores. Let's see how that affects these numbers. So 3% down gives you a rate of 2.875%. The mortgage insurance is 0.68%, gives you an effective rate of 3.55%. Monthly payment, $1,408.56. Mortgage insurance, $192.38, gives you a total monthly payment of $1,694. So $1,694. So as you go across the board, that's by having 100 points higher on your credit score at 3% down, it drops your payment almost $400 per month. And between a 680 and a 640, it's about $180 per month better. So the higher credit clearly gets you a better rate, better fees, better terms, so on and so forth. So 5% down, 740 credit score, gives you a rate of 2.75%. MI is 0.48%, gives you an effective rate of 3.23%. Principal and interest, $1,357.40. Mortgage insurance, $133. Principal and interest, mortgage insurance, $1,490.40. So it's about $120 cheaper by putting an additional 2% down using conventional loan. Now let's talk about FHA. 3.5% down, 740 credit score. It looks exactly like 680 and 640 with FHA. The rate's 2.25, mortgage insurance 0.85, effective rate 3.1. Payment, principal and interest is $1,270.97. Mortgage insurance is $235.52. Total payment $1,506.49. So payment with FHA doesn't change with regards to a 640 credit score or a 740 credit score. And so that 3.5% down is actually $94 better than the 3% down option. So putting a 0.5% down saves you $94 versus the 3% down. In this case, the 5% down option is $16 better than FHA. So you put an additional 1.5% down, it's $16 better with the conventional loan than the FHA. So what you'll see here, basically is that, FHA across the board ends up being a better loan for the most part. Now you'll have people argue, I'm gonna have people comment and say I'm crazy and that FHA is completely negative, but you have to understand, if you only have a minimal down payment, FHA ends up being the better option. Yes, you have mortgage insurance for forever, but chances are you're not going to keep that loan forever. So if you're thinking about qualifying, you want FHA, you want to know what it takes to qualify, look at this video here. I talk about FHA loan requirements, what you need to get an FHA loan. And if you're thinking about conventional, I'll link to another video here where you can look up conventional loan guidelines to see if you can qualify. So, that should give you a really good idea of why people use FHA. But understand, there are downsides to using FHA. Some sellers, some listing agents frown upon FHA because they feel like it's only for lower credit score borrowers. But you can even see, even in the higher credit scores, why somebody might use FHA versus a conventional loan, because the rate or the payment ends up being better. So I'm not here to pitch you on one way or the other. It's just to provide a little clarity and help you understand, the differences in the two, especially if you're putting a minimal amount down, and you can understand, which is better for you. But if you need, what I would recommend is talking to a mortgage professional, talking to someone who can break these down for you. They should be able to do exactly what I did, provide you the differences in the options, even throw a 10% option in there, and see which one works out best. And then you can make the decision. And if you need a referral to somebody who can help you do that, do me a favor, reach out to me directly, email me. You can find my email online there, but email me and I'm happy to put you in touch with someone who can help. If you have questions, it wasn't clear enough, comment below. As always, I appreciate you taking the time to watch. I appreciate the constant support. If there's something you want me to make clearer, reach out. But for now, I appreciate you taking the time to watch. We'll see you again soon. Have a great day. Bye-bye.